Hey guys, how's it going? Hope everything is going well. I wanted to do this video on the dollar index. What I've been talking about the dollar index is that I expected the dollar to rally, and the reason why I expected that was despite the rising interest rates, which I believe is bearish for the dollar, and also the tax cuts, right? Because all this monopoly money is going to flow into the economy now when you see investors more confident. The reality is that the commercial hedgers very net short the euro, which basically tells you they believe that the dollar is going to rise up. And this week we saw headlines from Secretary Mnuchin, however you pronounce the name. He wanted the dollar to be weakened. I don't agree with that. I believe in a strong dollar, right? Mnuchin is one of the Goldman Sachs guys, I believe, and he used to freaking produce movies. I saw him produce a movie with that guy from SNL, Will Ferrell, last year. So it's crazy. So we have a Treasury Secretary who produces movies, and he wants a weak dollar. Don't agree with it. And then Trump, right after, said, "No, I want a strong dollar." Wall Street may have convinced Trump that, hey, we know you're protectionist, but a strong dollar is what you need. So when Trump came out saying, I want a strong dollar, right, the euro surge turned into a slight euro gain. So we should keep a close eye at the dollar, right? We have the State of the Union on Tuesday, I believe, and Trump, if he says something about the dollar, he wants a strong, stable dollar, right? You may see the speculators, the hedge fund types, they may reverse course, right? They were getting hugely long into the euro and short the dollar. Now that may reverse course. They may talk it up, and then you may see some data in the economy saying that, okay, real interest rates are actually rising, right? You're seeing a less negative real interest rates than we did before. And if you see that in the data, right, you may see the dollar surge up because of that, temporarily speaking. I still believe the dollar is going to go lower, but temporarily speaking, I expect the dollar to rise. And that's how some of my iron condor positions are set up right now. I mean, yeah, I've sold a put and sold some calls, but it's biased towards the short euro trade. And just like with my crude positions, I've been having some iron condor positions, right? More biased towards the short crude end, which has not worked out for me. And I'll go into it later this video. But anyways, this guy, Northman Trader, his name is, I believe, Sven Henrik, if I'm pronouncing it correctly. He took a look at this data in this channel, the US dollar, and he believes that the dollar is going to go up. Well, this was from a few days ago. It did break this channel the other day. It went to 89-ish and a little below that. Now, if it breaks well below it, then you could kiss this channel goodbye, right? And the dollar would most likely go lower from there. But if it bounces back up in this channel, right, then we could see the dollar go up. You have a bullish divergence with the RSI. So I usually look at the COT report, and I look at technical guys that put up charts that align with what I'm seeing in the COT. And in addition to that, I have been looking at price of crude, right? Some people say that crude oil, the higher the price of crude oil goes, the lower the dollar value goes as well, right? Because it's inflationary. And the COT data has not worked so far this time around for me. It worked last year a lot, right? When they were the most net short in February of last year, what happened? Crude oil went down 10 bucks, 11 bucks. And I wanted to look at this over here. So I was talking about the COT data, right? This individual, Adam, from Free COT Data, has this Canadian dollar COT report, and another way of looking at crude, since I talked about it earlier, was looking at this. And I even did videos about this last May. I said that, hey, if the Canadian dollar is rallying, that should mean that crude oil should be rallying. And right now, the commercial hedgers, they're not very net short compared to historical records. And this is looking at data from the past 5 years. The dealers are in the 19th percentile, so they're not the most net short, but they are getting there. And one thing to add, it's actually 13%. I noticed the other COT report, the commercial hedger data, they're net short minus 53,000 contracts. So it's not the most net short. The most net short was minus 98,000. So long story short, if the Canadian dollar continues to go up, right, relative to the dollar, crude oil should go higher. And I saw some Fibonacci charts where crude oil should be hitting $76. So that's something to note. I'm going to have to be a little creative in getting out of the jam I'm in right now in crude. Even though I do sell options, right, I get premium for it, I'm still at a loss. So I'll probably have to put some iron condors. And if you look at the stock market, it's been going tandem with crude. So stock market and crude oil go in the same direction. So I may have to put on a little more long positions than I have, but I obviously hedge that. So I probably go long futures contract, but then buy weekly puts, buy in the money puts to hedge it. And if we see like the S&P go up, what, 20 handles one day, I'm going to make good money on that trade. And the State of the Union is coming in a few days. So the investors usually tend to be conservative and give Trump the green light during the State of the Union, or when he makes speeches. He made a speech on Friday at Davos, right? Stock market went up. So we may see the same thing on Tuesday night, and that's what I'm looking at for this week. And even if the dollar does rally, right, I wouldn't expect too much of the crude oil to go down based on Trump speaking, right? It's just the reflation trades coming back. The other thing is gold and silver, right? Open interest is getting high up there. Even though it's high up there, that doesn't mean that we're at a top. But last time I saw it was like, what, close to 600,000 contracts. So if you get into the 650,000 contracts, that was the most open interest ever, I believe, in gold. So that's something to note. So we may see a short-term pause. I know Alistair McLeod, he said that gold and silver are due for a pause, but it could go potentially a little higher before we get that pause. But anyways, guys, let me know what you think, and I'll talk to you later. Thanks. Bye.